Yeah, I might have to dip if the baby starts getting cranky.
Oh, it's all good, bro. I know all about that. It's cool. All right, so fellas, so I wanted to go over to help people pass evals, quicker, if in case you guys are struggling with that or anybody struggling with that. And then after that, I want to talk about my overall strategy, which Big M's doing a lot of the same kind of stuff, and it's what he was just talking about is huge because, for example, most of my wins are 4 to 10 plus R, because I'm looking for a big setup and I just wait, and I'm taking fewer trades these days than ever, but they're bigger. So it just gives you more confidence to hold and all that stuff. So we'll get into that. But so I'm sharing my trading view. You guys don't need 5 charts up at once. I I keep these 5 up, but you can get away with 3. I'd suggest the 1 minute, the 5 minute, then a longer time frame. Like my daughters do the 1 minute, 5 minute, and then their third screen is that, the hourly, or they switch back and forth between 15, 30, hourly, 4 hour, and daily, just depending on where we're at on the chart. So for the evals, honestly and truly, all you need is the 1 minute chart. And I'm going to show you why. Okay. You guys see that pretty good?
Yes.
Yep.
All right. So on the 1 minute chart, you can see liquidity is everywhere in the market, right? There's liquidity up here. There's liquidity down here. So what I'm looking for on an eval to pass an eval is a sweep of liquidity, and then formation of a fair value gap, and then that gap gets inverted, meaning disrespected, and it goes the other way. So for example, let me just I'm going to chart one on here since there's none in the area that I want to show you right now, but let's just say they swept this low down here, right? Let's say they sweep this low and then they create, on the way down, they create a bearish fair value gap, right? So I want them to take that low, and then what I want them to do is take the low, create this gap on the way down with a displacement. Then I want them to pump it and close above that gap. And that's what we call, let's say we closed, anywhere above that, right? That's what we call an inversion gap, right? So then you could go long right away, but even on the 1 minute chart, I don't like to go right away. I like to wait for a pullback. Sometimes you miss the trade on the 1 minute because it's really fast, but that's okay. But I still like to get a little pullback, just get a little better entry. And then I'm going to target this upper liquidity up here, right? But as you guys know, so I'm going to target up here. But as you guys know, on the evals, you only need, on NQ, you only need 15 points if you're full sending these things, right? And I recommend full sending because it's the fastest path to stacking a bunch of evals. The drawdown gets you eventually if you don't full send them. It's harder to manage. It's more mental stress. I can recommend full sending. Like I had before Apex capped out the max amount of evals you could have, or past evals. I had one day where I passed like 27 of them. Just using the 1 minute chart. So the same rule
Hey,
applies for upper or lower liquidity. Okay.
hey, Steve,
Yeah.
check out 1050 on that chart you're looking at. There's a big one right there with a big, huge drop. 1050.
1050. All right.
Yeah.
Yeah. Okay. So yeah, this is a good example. There's
Going up right there.
so
Green can.
yeah. So this is a good example. Okay. So good. I'm glad you saw that. So this one.
Up. Right there. Yeah.
right there-ish.
Yep.
I'm just going to switch it to green just so you guys can visually know that that's a bullish one. All right, so that was a bullish gap there, right? You see, if you guys see this candle to this candle, a bullish gap, right? So
Yep.
they swept a high here, they dicked around a little bit. This gap was there, they inverted it. So this was the inversion, unfortunately, which put it way down, you know. Then your entry's up here somewhere. It still would have worked. I like entering near the old gap that was just disrespected, you know. So this one kind of dumped pretty fast and got away from you, and then it came up. But you could have entered like on this pump, and then it still would have worked, right? To retest this purple line is overnight high, or no, I'm sorry, it's an old overnight. So that's a perfect example. And then let's see, there should be a bearish there's a bearish one down here. So let me just do this again. So there's a bearish one down here near this low. So there's a bearish one right there, okay? If you see this low here, so that's the liquidity they were sweeping, okay? And then they actually swept deeper, but they swept that liquidity, created this bullish gap, right? Then they pumped. They
Bearish gap.
Yeah, sorry, bearish gap. So then they pumped, disrespected it on this candle right here, and this is a perfect one because then they tapped into the gap again, which that's like my favorite entry, right?
That's your buy.
Yeah, that's my buy, and then boom, and then in 3-4 minutes you're out the trade, you know. Sometimes it's seconds, you know, because this creates like a strong draw on liquidity when they invert. It creates a strong draw on liquidity generally to the next batch of liquidity. The next batch of liquidity is up here. You see these highs right here. So that's what they did. They tapped that. And you know, to pass that eval, you need to be 940 only here. That's it. You know, that's all you need to pass the eval. And
It
like
doesn't look like
it's not much. It's nothing. It was 2 candles. You know, 2 1-minute candles. And this is like pretty common. My daughter passed I think 17 of them 2 weeks ago. Because she just wanted to stack as many as Apex would let. Like, you know, before I have like 95 of them just sitting there, extras, just backups. But then didn't they max out at 20?
yeah, they've changed now.
Yeah, which whatever, who cares? But the point
Yeah.
is, you can go back and pass these like really quickly just using a 1-minute chart and these inversion gaps. I mean, the other thing that I do sometimes, it's a little ballsier, but if I know there's a strong draw on liquidity, like for example, I see these lows over here at this bullish gap, I might go long right here. You know what I mean? And thinking that they're going to pop it, and then
Yeah,
you know,
that's an
yeah,
inversion.
I do that a lot, and then end up creating an inversion gap too. So you know, there's lots of ways to do it, but one of the clean ways to do it is let these gaps form. And when they are inverted after sweeping a low or a high, that's when you look for an entry because it's a stronger draw. The other thing I use this method for is you guys know how sometimes we're trending. You're like, oh man, I don't know. I can't get an entry. I don't know what size pullback to look for, you know? And it's frustrating because you know it's going to go, but you're like, where's a safe entry? Well, the safe entries are these inversion gaps because let's say, you know, NQ's pumping and they just keep pumping on the larger time frame chart, you know, 5-minute plus, and then you get a little pullback and you're like, oh, this might be it, but you don't know. Well, look at the 1-minute chart. If the pullback creates a bearish gap and then they invert and disrespect that bearish gap, that's your ad spot or your place to potentially get in. I add on those a lot. Like if I'm if I'm in a trade and I've already trimmed and I'm looking for a place to add, I will add on those inversion gaps, or I will add on a fair value gap that's in my direction that's supporting my direction on the larger time frame, and I'll get into that in a little bit. I strictly use the 1 minute mostly for inversions. Sometimes they're holding a gap, and that's great. It adds to my thesis of direction. I know the guys that M has been working with use the 1 minute both ways, which is fine too. I like it for inversions because it just shows me some strength. And it's normally an impulse move after there's an inversion. There's normally an impulse, so it's normally pretty quick. That it goes, and you can catch something. Does everybody understand what I'm talking about as far as these inverting these gaps?
No.
Go over it again, Steve.
All right, cool. So, all right. So you see how we swept this high up here,
Mm-hmm.
right? This is the high that they swept right here. They swept this high, okay? On the way up, they created this fair value gap. So here's the first candle. Second candle is that big body candle, and the third candle, then that's the gap in price right there that needs to be balanced, okay?
That's from wick 1 to wick
Wick
3.
1 to wick 3, yeah. So that created that bullish gap because we're pumping, so that's a bullish gap. So what you're waiting for, if this is a reversal or potential reversal, they grind into it, they try to hold it, they end up breaking it on this red candle here, right? And this is a good one actually, because then they pump up into it, your entry's in there somewhere, okay? And then they would have, you would have passed an eval on this one too. It would have taken longer, like 10 minutes, but it's also 12 o'clock, which is normally slower movement. So same kind of thing. This inverts, and you could have passed an eval on this one too.
And you stop just above the gap or at the
I mean,
most
on the evals, I just let it blow or pass, right? I don't care. It's
right.
no emotional attachment. It's just gonna blow or pass. On a real trade, if I was entering here, if we got to close above that gap again, then I would, with strength, then I would close it or have my stop up above it. If I was entering off of it.
And Steve, you do it different based on each. So, like 1 minute chart isn't necessarily the same for inversions as like a 5 minute chart.
Yeah,
or
I like when a 5 minute inverts if it's telling me my direction is correct. For example, let's say I'm bearish and they invert a 5 minute bullish gap. I like that because it's giving more evidence towards my idea.
Mm-hmm.
But a lot of times I'm long and then we invert a bearish gap, on the 1 minute, and that's what I want to see to show me I'm potentially right.
Okay.
Yeah. So
what size evals are you doing, Steve?
what's that?
What size evals are you doing?
I mean, I have pretty much all 50s, but I have like 5 250s that are just sitting there. They're just past evals.
Yeah.
The 50s are real easy to pass. The 250s are harder, I think, as you know, M, because it's you can't just full send them because the drawdown will just kill you, and you could full send it during CPI, but you're gonna blow it or pass it, and that's it. So the 50s I like because they're pretty easy to pass. You can get it over with. It blows or passes, move on. Like I think out of the 95 or whatever that I have as backups, I think I did that with like 150 evals. I have it written down somewhere. I think it was like 150 or 160 evals. So it's like a, 60% or something pass rate. The way I look at that is just cost of doing business. You know, I don't want to spend days on an eval. I want to just get it over with and move on. You know,
Makes sense.
and I think that's the most effective. I think you're going to find that I've run the math. I think you're going to find it's the most cost effective way to do it too, because you could spend, you know, trading it normally, you could spend, you know, weeks trying to pass an eval, right? Whereas if you
Yep.
just full send that thing, it's over with and you can move on, you know.
Yeah. For my style, Steve, I can't do it like that. It takes me like 3 days to pass an eval,
I
but
got
that's
you.
just for me.
Yeah, I got you. And then I'll post in the chat too, if for some of you guys that aren't familiar with imbalances, the best guy that I've seen on Instagram is Tom Camp. He just has a very simple and clean way of explaining it, and honestly, it's a very simple concept because you know the market seeks two things: it's liquidity and balanced price. So if you understand that, you can look for areas where they might balance and areas where they might seek liquidity, and that's how you kind of make a trading plan for the day. So that method I use again for passing evals, adding to trades, and sometimes finding an entry when nothing else is telling me, when not much else is telling me, you know, to enter. And then anybody got any questions on that? Okay.
I think I do the same type of thing, but I just read the price action, and like I do something similar to what you're saying, Steve, but I don't draw boxes and stuff like that for the 1 minute candles, but I
Yeah.
read the 1 minute candles. So I think I'm doing what you're saying, but it's like me unconsciously doing it.
Right. Right.
I have a question, Steve. It's Fall.
Sure.
Hello.
What's up?
Hey, so basically, your A plus setup is you look for a bullish fair value gap, and then you wait until they go back into your bullish fair value gap, and then you go long, and then it usually will take off.
Well, as far as the 1 minute chart you're talking about,
Yeah, yeah. The eval, passing
yeah,
the
for
eval.
the evals, my A plus is like if they swept a high and on the way up they created a bullish gap, I'm waiting for them to disrespect that and close below that gap to signal the short.
Right.
And if they swept a low and on the way down they create a bearish gap, I'm waiting for them to close back above that gap, which disrespects it, and then I go long.
Oh, okay. So it's like the
So it's
opposite.
the
Okay.
opposite. That's yeah. So it's inverse. So it's I'm waiting for them to disrespect the gap that rather than respect it. And that, but it's key to be when they're sweeping a high or a low. Like if you're in the middle of a little range, it's not a great setup, you know.
Mm-hmm.
But if the 1 minute's at the top or bottom of a little range or even a big range or whatever, that's when you look for these inversion plays to reverse direction.
Right.
Make
And
sense?
then, okay, yeah, it does. And then to find a fair value gap, you just look at three candles. You make a box between wick one, or the wick of candle one and the wick of candle three,
Correct.
and
And the
that's
on
not
TradingView,
the body, but the
do you
wick.
guys have TradingView?
I do. I have an algorithm that finds them for me.
Yeah, that one is the best. The Lux Algo Fair Value Gap.
Yeah, I have it.
Good, because then you don't have to chart them, you know, and it shows up on every time frame.
My issue with that is NinjaTrader doesn't really show the same as TradingView sometimes. Is there a way to copy trade off TradingView, or how are you doing with that?
I have TradingView on my one big screen, and then I have Ninja on another one. So I just execute. I'm looking at TradingView, and I'm just executing on the other one.
Okay.
And it's really close, so it's close enough for me. You know what I mean?
Yeah.
Yeah. So All right, cool. Let's talk about like strategy stuff.
Sure.
If you guys don't mind. So
Let's do it.
basically what I do is I go from the weekly all the way down to the 5-minute time frame as far as like looking for areas of interest, right? So on Sunday, I decided that, last week was a shooting star. I thought that maybe Monday or Tuesday we would create high of the week and it might be a red week, right? So that kind of forms a bias for me, but I'm careful with a bias because I don't want to just take trades only with my bias, not realizing I'm wrong and then losing a bunch of money, right? And you don't have to have a bias. I just like it's part of my plan to kind of have a bias and then look at the time frames and see what I'm seeing. So
Hey,
let's
hey, Steve,
yeah.
I have to get going because I have a work meeting, but
Okay.
thanks. I'll look at the recording
Yeah, no
after.
problem. No
Appreciate it.
problem, dude. Um, so for example, if we look at the daily, we're obviously overall bullish, right? But we need pullbacks, we need corrections, all that stuff. So, I was pretty bearish this when I woke up this morning because the first thing I do every day when I get up is I mark opening print, and opening print would be last night's open. Okay, or you can just go to the daily chart and hover over the candle and the open. It'll tell you, the opening print today was 19,973. Okay, then I mark that. Then whatever the range is overnight, the high and the low, I mark the high and the low. And like today, I think it was around 100 some points, 107 or something. So it's a decent range for overnight. So okay, well that's a good range to start with. So I mark the high and the low of the range. So, and if you guys see, you can see this. This is here's the low. No, sorry, my fault. Yeah, that's the low. It is 19,904, or 19,901, and then the high is 19,973. No, sorry, 20,070.50. So I have this algo here that's just showing the range of the daily candle, but you can use it or not. It doesn't really matter depending on what you want to do. But so I marked the opening print high and low of overnight. Okay, it's the first thing I do. That kind of gives me a point of reference. I generally do not like selling unless we're above opening print or buying unless we're below. There are exceptions, of course, if we're trending. Like yesterday, I was short bias, but they just kept pumping. And I shorted once and I trimmed and moved my stop, got paid. And I was like, I don't know. Maybe they're not. And then I left, went to the gym, did some stuff because I don't trade during lunchtime hours. And then they pumped it up to my next zone of interest. And then it melted like 100 points off of that. I was like, okay, well, that was a good short. But I realized that we're still looking bullish. This is a pullback. And they never retested this certain level. And then I went long there and it was 110 point on the runners. And I'll show you guys that trade, but I'll show you like how I find this stuff. Okay, so if I go to the 4-hour time frame, right? Okay, so you see these gaps, right? Big one up here, big one down here. This would be an area of interest for me, right? Because it's a bullish imbalance that has not really, it's been tapped, but it hasn't been really tested a whole lot yet. This is an area of interest for me. It's a long ways away, but I like that up there. Well, near that area, we have the overnight high, and our lows down here, right, from earlier. So what I'm going to look for is I'm going to look for areas around those highs and lows on the other time frames as potential evidence that, maybe there's a good short up there, maybe there's a good long down there. So if you go down in the hourly, okay, so hourly, this is our high up here, right? Well, there's
Mhm.
these imbalances here that look good for short. I'd rather have one up here, but it's just not there. So it is what it is, right? But we had a big rejection off of this one already. They probably go back in there or go higher and reject again. So these are areas that I'm going to look for shorts on the smaller time frame because I know that there's imbalance here that needs to be balanced. Price needs to come up into here and balance it before it can theoretically go back down. So I know those are two areas that I like for shorts. So if I go to the smaller time frame, I just keep going down. Okay. And if you look at the 30-minute, 30-minute has gaps in the same exact area, right? The 15-minute has a gap right above where we just hit that they tapped. And then if I go to the 5-minute and blow that up, you see these gaps up here?
Mhm.
Those are in line with that upper imbalance that is on the 1-hour chart. Okay. So I like short where we're at. I don't like it right now because we're in a bullish gap. So I like short if we get up here, but I especially like it if we get near the top of the range. Okay. So what I'm going to do is if I know I'm going to hunt a short up in this area, I'm going to do one of two things. I'm going to enter where I see confluence on some liquidity on the hourly chart or gaps on the 5-minute chart that align with that liquidity. And what I mean by that is on the hourly, so and it's easier if you guys could see all my charts at the same time, but it's just going to be too small.
Mhm.
So right here on this hourly, right? This hourly candle, the high is 20,049.25. That high is liquidity, okay? As is this set of equal highs up here, right? But that 2049 up to this overnight high is 20-point difference, okay?
Mhm.
So what I have to decide is, am I going to go short right when they snap that liquidity on the 2049, or I'm going to wait till they drive a little higher just in case they take the overnight and then reject, right? So you have to kind of I pre-plan all my trades. Like I plan them out before they happen, so that way when they happen, I can execute without thinking about it. There's nothing to think
Mhm.
about. I want to enter at this point. If it hits it, I enter, and that's it. Win or lose, I enter. Okay. So what I'm thinking here is I already pre-planned that I want them to take this liquidity at 20,049 and pump a little higher, maybe 10 points, and I'll go short unless I see a massive impulse like they're going straight for the high. You know what I mean?
Mhm.
And then I'll go short and my stop's going to be above the overnight swing high. Okay? My stops vary in size. They average around 20 points. Sometimes they're 15, sometimes they're 25, but they average around 20 points. It's rarely over 25, but unless I have like super strong conviction on a trade and it's just like I think it's going to be a banger and I think they might retrace some more and that type of thing. But rarely it's over 25. So in this case, I could go long in here around 2055, 2058, or excuse me, short, sorry. And then my stop is probably going to be a 20 to 25 point stop up around 2075 to 79, somewhere in there, which is, 10 points or so above these equal highs. Yeah, I could still get stopped out and be right, but I'm looking for the candle behavior to tell me like, should I enter early or should I wait till they're just driving it? Let them go, keep going, and then look for something. So I take the entries like a lot of times off the liquidity grab, which is an early entry. Um, You don't have to do that. A lot of people are not comfortable doing that. What you can do is wait for them to take the liquidity. Then you get the sharp downturn after they take that buy side liquidity. Then they create a fair value gap on the way down, and then they go back up into that, and then you enter off of that. When I say create a fair value gap, I'm talking about the 5-minute time frame. And that gap inside that time frame, inside, you know, the hourly, inside the 4-hour, they're all telling you the same thing. And I like that because then it tells me on several charts that this short is probably going to work. You know what I mean? So I start with that longer time frame and find these points of interest, right? Based on because the longer time frame is going to drive the market. So I find these points of interest, and then I just start going down in time and seeing, okay, this supports that, and so on and so forth. And the other thing you can do is, let's say they're going for that liquidity and they take it, and you're waiting for the reaction, and then on the way up taking that liquidity, they're going to create bullish gaps because it's going to be an impulse move, right? They're going to create bullish gaps on the 1 minute. And let's say they take that liquidity, they go above, they create a bullish gap, then they invert that bullish gap. That's also could be a signal for entry as well, because you're seeing finally the weakness after the big pump. So I know that's a lot, but basically I start with the weekly or daily. I don't look at the weekly too often. I look at it kind of beginning of the week or middle of the week, just depending on where we're at. And then I go down, to the 4-hour and to the 1 hour and so on and so forth. If I don't, let's say I see something on the 4-hour, but there's nothing on the 1 hour, which sometimes does happen, then I look at the 30 and the 15, and then, okay, the 30 and the 15 are supporting my idea on the 4-hour chart. So then I'm looking at the 5-minute. What can I find in that area of interest that could support an entry? And then I just wait, sometimes you're going to miss them because they happen off hours, or they happen during lunch when I'm not trading, or I took a win in the morning and I'm done for the day, and then my big play comes in the afternoon, and that's just whatever. It's fine. No big deal, because there's so many opportunities, it doesn't really matter. But I basically make a plan every day, and my daily plan a lot of time coincides with my weekly idea, but I make a plan every day based on where price opens up at and where price is in the morning. And then like I said, I predetermine where I want to enter the market. If it doesn't hit those areas, I don't take a trade, right? The beauty of it is, I think Gundo and I were talking about this, but last week I had an area. It's an OTE is what Tom Camp calls it. It's a optimal trade entry area. So I had an OTE identified for a bullish OTE. And I think I took 6 trades off the same zone. And the smallest one was like 40 points, and the biggest one was like 140 points. And they were literally all off the same zone. And what they were doing, there was kind of liquidity stacked in the zone, right? At 4-hour and hourly, and each wick was a little lower. And they would go and they would grab a wick, and also they were inside imbalances, so it was all supporting the bullish thesis. They would go grab one wick and rocket it, right? They'd sell it again, go deeper, grab another wick and rocket it. And they did this like 6 times. And I went like 6 out of 6 on that zone. It is a great setup. That doesn't happen all the time, but when you have a zone like that, it's something to watch because they could potentially hit it several times, And it was a big zone. It was like a 50-point zone, which obviously you guys can't have a 50-point stop. But I knew that, okay, if they take this hourly liquidity and drive a little deeper, I'm going to go long here. And then boom, it goes. And then so on and so forth. And my
Hey, Steve, so
yeah,
I got a question for you. Given that you're going for like these longer, plays,
yeah,
how do you manage that through Apex? Because my biggest struggle with Apex is the trailing drawdown. I mean, I
yeah,
try. I'm trying to stay away from scalping as well, and going for longer, plays.
right.
Works fine with Top Step, but I always get burned with Apex.
Yeah, until Big M and I have a saying that static is king, meaning once you get your counts to static, when you get to the payout threshold or beyond, the drawdown's gone, and then it's just minimum balance, right? That's when you should be holding trades, in my opinion. Once you get to static, it's hard. It's as you said, it's harder to hold when you got that drawdown. So, like for example, what my daughters have done this morning, for example, my daughter has one PA that's lower than some of her other ones, so she wanted to build it up, right? So she took a play today, and it's a trade that I held runners on, but she closed it because she didn't want the drawdown, which makes sense, right? So what she did was she entered off the 1 minute chart off an inversion gap, and she was targeting some buy side liquidity at the top of this little range, which was my trim point to go higher, but that was her exit point because she wanted to just smack it and take all the money and not get any drawdown. You know what I mean? It was like 39 points, which is a good little trade, right? Because her risk was 15 points, so she almost 3R'd it, and she got no drawdown. So what I would suggest until you get static is either don't leave runners or trail your runners a little tighter than you normally would with your stop, so that you don't get a lot of drawdown. And then I would also suggest, I know anybody trading 50K accounts or smaller, I would suggest until you're static, not trading minis. I would only trade micros because the minis will eat you up on the drawdown. Even one will eat you up. So I mean, because if you have one and it goes up $500 and it doesn't take long for it to come against you $200, then yeah, you make 300, but you lost 200 on your drawdown. And honestly, guys, you can get to static within a couple weeks if you're really disciplined on a 50K account using 3 to 5 micros. Um,
Yeah, that's been my size, like
yeah,
5 max.
yeah,
And then I'm at like static on 3 accounts, but my dilemma is always that I want to take payouts, so I go back below the static, So
yeah,
that's
yeah,
how I got to figure out how to balance that because I need the money. So
yeah.
it's a
You just
little
have to
hard.
measure, and that's a personal thing for sure. You just have to measure that. Like, okay, if I get to 52.6 and I take $500 out or $1,000 out, yeah, you definitely need to stay with micros, right? Because you can't afford to take a couple hits with the minis and then you're like, oh crap, I'm gonna blow my account.
So,
Um,
so regarding, I got a question because I haven't really been trading Apex lately.
yeah,
I traded the last play cycle, and
right.
I did so, and haven't touched it since. So I took out 2K from my 50Ks. I think I'm below some of them. I'm below like the 52 600, right?
Yeah.
So does that mean that my account is no longer static? I can't remember. I thought once you
Still
hit that
static.
threshold,
Yeah, you're
you'll
still
always be
static.
okay. Perfect.
You're still static, which is great because if you go a little below, no big deal. Just stay conservative, take a couple wins, you're back good. Um, that's the beauty of it. Once you get static, you stay static until and if you blow your account, you know. Um, so static is where it's at because then you can, if what I used to do when I was doing micros, I still do micros sometimes. Like let's say I took 2 wins or one big win, but then another really nice setup comes, I'm like, I predetermine what am I willing to give back if I'm wrong. And sometimes it's like, I'm not willing to give back 10 grand. I'm willing to give back X, right? Then I will go to micros, like 10 or 15 micros instead of my normal, like my normal size is 2 to 5 minis. So if I don't want to give much back to try this trade, then I'm gonna size down. And I'm telling you guys, like micros, Alex knows he's making money on micros. Like micros, they can pay you pretty good. I mean, you can get $300, $400, $500 trades off of a few micros. If you catch a nice trend move.
I did $600 today on like 5 micros, and I trailed them out. I just held one runner pretty long.
Yeah, and that's a banger. And those happen quite often. Like they really do. Like NQ moves a lot. Like the range today is pretty small so far for NQ, but that's expected because we got big data coming out tomorrow and Friday, right? So if you're just aware of where you're at and what the market's doing, you don't need much size at all. Like, I mean, M knows this. It took me months to be confident enough to get out of micros and move into minis, and then my goal by the end of summer is be using 5 as my starters and 10 as my full size. And that sounds crazy, but 1 or 2 sounded crazy to me a few months ago. You know what I mean? Because of the drawdown factor or the fear of taking a big
Yeah.
hit. So you just have to evolve and progress and build your account up so that you got enough reasonable cushion to take a little more size.
Yeah.
Just remember, there's always tomorrow.
Totally, dude. I mean, that's the beauty. Like I was talking to my daughter today because she was like, that one account that she's trying to bring back. It's not even bad. She just wants to build it up. She just did 3 micros on it, and she didn't trim because it had momentum and inverted this gap and had real momentum, and she just trailed. And it was 39-point trade. She ended up making like $200. And I'm like, when you're copy trading, that's 4 G's.
Yeah, it's a lot.
It's a lot of money, man. Like, and if we just keep in perspective, like, I'll have a day. It's like, oh man, it was only 10 G's. It's like, I'm like, do you hear yourself? Do you hear yourself? It's only you've never made that much working your business for 30 years in a week, and you're bitching about a 10G day it was like 45 minutes of your day. So the perspective is very, very important to like, because the market's there every day. There's big opportunities several times a week. My goal is to take even fewer trades, get even pickier. I think that's honestly the best route, because exposing less risk, the winners end up being bigger, and you're just looking for the primo setups. And when there's so many opportunities created by the market, there's no reasons to not take primo setups. Whatever your primo setup might look like, everybody's might be a little different, but if you can, I would highly suggest, if you guys are not, anybody that's not, you start with the larger time frames, find these areas that you like for shorts and longs. Whether it's areas of support and resistance, whether it's order blocks and imbalances, and then wait for price to get into those areas. And I think you're going to find that once you get into those areas, that are dictated by the larger time frames, you're going to see these trades move generally with a lot more volatility and a lot faster than when you're in the middle of a range, for example. Yeah. In the middle of a range is not where you're going to get the volatility, generally speaking. But when you get to a top of a range or a bottom of a range or in some price imbalance, that's when you're going to get the volatility, and your trades can go off pretty quick. The other thing that I do is depending on the momentum. Let's say I get in a trade and it just really moving, really like right off the bat. Then I may not trim like at 15 or 20 points. I may hold to some area on the chart, either the 1 minute or 5 minute, where I see some liquidity that they might try to grab, and then I'll trim there. But if it's not really moving, I'm very quick to take a trim and remove risk, okay? Because I can always add if I'm right. I never add to a loser, ever. But if I'm right and I get something showing evidence that I'm right, then I can always add back in. So I wouldn't be afraid to take off some size to just cover your risk. And then if you're right, you can always add. You know, I do it all the time. And sometimes the trade's just like a 40, 50 pointer, which is a nice trade, and I don't get a chance to add, and that's fine. You know? No big deal. Didn't give me an opportunity to add, but I got 40 or 50 points out of it. Let me see here. Hold on. Anybody got any questions on that stuff?
I'm just listening, eating some lunch.
All good. All good. So let me show you guys an example. This might play out. I don't know. See these equal lows here? Right here?
Order filled.
So they just took those equal lows, and it's bouncing, right?
Right.
But is it the bounce, you know? So what I would use then is on the 1 minute here, there's a bearish gap that was created on that way down. Now if they invert this, which they're just about to, and they retest, watch it pop, and maybe you target these equal highs, and that would pass an eval. Or trim on your real trade, right? So they just made equal lows. They just inverted a bearish gap that was created on the way down. This probably pops in the next candle or two. Yeah, so this would be an entry right here. This would be a good entry right in here somewhere. And then it's likely to pop. As we know, the market can do whatever it wants. It doesn't have to. But it's likely.
If you're on the 1 minute, you could even go to the 30-second chart and find a gap, probably.
Exactly. So
just out of curiosity.
Yeah, it's likely to
Go
pop
to the
here.
30 second.
Yeah, so it's likely to pop. Doesn't have to, but there's a good chance it pops, right? So let's just watch it for a minute. And I'm going to draw where that gap was. My fault. Hold on. I'm going to draw where that gap was.
So, Steven, sorry, I had to walk away. So, where did you identify that gap? Was it at the 15-minute? Was it a 15-minute fair value?
So, it's the on the 5-minute chart. There's they took the equal lows, okay, and then on the 1 minute chart, there was this bearish gap right here, just above those equal lows, and they inverted it. So my theory was they come back into it, retest, and then they blast out of it.
Yeah. I do the same thing, Steve. I read it off the 1 minute too, just like you're reading it.
Yeah,
and
it's good.
I just look at the candles and I kind of read the action and then I just play off of it.
Yeah, so if we watch this for a minute, we'll see if it pops, but I would be thinking about trimming or targeting these equal highs right here.
Where at?
Yeah, these equal highs right here.
On the 1 minute?
Yeah, on the 1 minute, which is about from where my entry would have been. My entry would have been somewhere in here. It's about 15.
Yeah, I would target the 20. I would target 19,985 just because it's the 20 and then the 9.
And that's actually a good spot too, because there's a gap there and there's some resistance right there too. So that's actually a good spot too. So my point is, like, and we watch this play out, it's kind of cool to see it real time. Like if it hits those equal highs, that passes an eval just like that. Right? If they hit those equal highs, it'll pass an eval. They're retesting opening print here. But even if they reject, there's a good chance, they tap those highs before coming back down.
Yeah, I'm gonna take it right here. Boom, I'm out, and I'm good.
Yeah, so so they just tap the equal highs. So there you pass an eval just like that. So that's why these inversion gaps are so good, because they show strength to the other direction. And then you normally get a little impulse move. And right now it's not a great time. It's, before 1 o'clock, it's kind of slow. And that's still, in 2 candles, you pass an eval, So it's good to see that in real time. But yeah, and well, actually, let me leave that there for a second. So just to reiterate, so they made the equal lows on the 5-minute, which are here. They took those equal lows. We got a bounce. So then I'm looking at go back to the 1-minute, and those equal lows that created down here created this bearish gap on the way down. They inverted it on this green candle right here. And then when they retraced back into it, I would have gone long, and then it would have hit my limit right there. And as you can see, they rejected right off those equal highs. So that's a good place to trim, get out, whatever you're doing, depending on what you're doing. If you're passing eval, you would have passed, but it's a good place to trim. If you have runners, trim there. And then if it breaks out of there, cool. It'll keep going, and look at the next set of highs, for a target, and then the next set of highs for a target. If it keeps trending.
Steve, can you show your trades for today? Show us your chart.
Sure. Let me
Do like on the 5-minute and just show what you traded today.
Yeah, sure. Oh yeah, I want to show you guys yesterday too, because yesterday was important. All right, so what time are we got? So 9.
Can you show your actual trades? Like I want to see your entries and exits.
What, off my Ninja?
Yeah.
I don't even have them plotted. Like I don't plot my trades. I keep the chart clean, so I can just show you guys where. Yeah, I don't plot them on Ninja. I just trade on there, and then I don't have anything plotted. All right, so there's a 30-minute gap down here, which you guys can't see right now, but what I did was I entered long right here, okay? If you guys look back, you see this 5-minute gap back here from yesterday?
Mhm.
We tapped, this is an old high or low, I can't remember, I'll have to look. And there's a 30-minute gap right here too that we tapped into, okay? So then, and it respected this 5-minute. So I went long right in here, okay?
Right on the morning. This is like 9:35, right?
9:35, yeah. And then I trimmed on this 940 candle right here around where this high is right there, okay? That opening print high, I trimmed right there, okay? So then we got a nice displacement up. There was a gap here that I'll draw so you guys can see it. I added on that one. So there was a bullish gap right here that was created, okay?
Yep.
Let me just paint that green so it's not confusing. Okay, so it displaced, went above. I figured they were going to retrace, but I wasn't worried about it. I moved my stop up to my entry because it was, we're now 30, 40 points above my entry or whatever. So this gap was created on this third green candle right here. I knew they were going to test it, so I wasn't worried. They came down to the bottom of it. I think I added almost at the bottom somewhere in here. They popped it again. I trimmed again. And then at that point, I'm like, I'm just going to hold my runners. I had 2 more left. So I moved my stop up to my add spot after they pumped it again. And then after this big pump right here, I thought they were going to keep going. But either way, I moved my stop up to right in this area. And then on this dump to retest the gap again, they stopped me out, right? But net runners 27, I think, was my entry. Almost 70 points on the runners. And so that's a pretty solid trade. I was hoping they were going to go up into this area and where I'm really interested in shorts. But it just wasn't ready, you know. So then what I did was they tested this gap. I thought maybe they go long again. They failed to break the structure of these highs. So it looked to me like they were going to short again, and they inverted a 1 minute bullish gap right in this area. So I then went short right in here. Okay. I trimmed in this bullish gap just because I figured they'd bounce it, and they did. So I trimmed like right around the top of this bullish gap, which ended up being a good trim. It was like 30 points, I think, which is a really big trim, actually. I normally go 15, 20, but it had momentum, so I let it go. I trimmed there, moved my stop to break even. It pumped a little bit here. It didn't make me nervous because we're in this gap. And then this candle closed down in the gap. When this one disrespected the gap, I knew I was in good shape. So then I moved my stop down into the gap. And I was targeting the low, knowing that they might bounce it before, and my stop was right in here, and they stopped me out. But that one netted 95. Yeah, 95 was my entry. Like 65 points. So solid, not a giant, but solid, right? And then now we're in tweener zone. It's ranging, and it may range the rest of the day. Who knows? And I know that there's big data coming out tomorrow and Friday, so they may chop it or range it. So I'm not interested anymore at anything unless we take these lows or unless we approach these highs, because
Yeah.
those are the higher probability setups. And given the data that's coming out and that it's, today could have been a really choppy day anyway, I'm happy not doing anything else unless we hit one of those zones I'm really interested in.
So then that's it. Those are the 2 trades you took, and then you think it's just going to chop the rest of the day, and you're done.
It might, dude. It could move. They could surprise us, but I set alarms. So what I'll do is I'll set an alarm for up near this area and down near this low. And if I'm home and they hit the alarms and I like it, great. If I'm not home, whatever. Who cares? Come back tomorrow, But I will tell myself, and I coach myself through this stuff every single day. I'll tell myself, you're not taking another trade unless price hits this area and you have a clean setup, or it hits this area and you have a clean setup. You're not taking a trade in here because I already took 2 and made money, and I'm aware that it might just dick around the rest of the day because of data coming out. So unless we get into a really high probability area, I'm not taking another one. And a lot of times I'll tell myself that, and I'll come back, at 2 o'clock, and we're in an area of interest, and I'm like, I don't need to. I already got 2 wins. I'll just come back tomorrow. You know what I mean?
Do you size the same in the afternoon as you do in the morning?
Yeah, my size is pretty much always the same. I start with 2 or 3, and then I'll add 2. And then sometimes I'll start with 2 or 3. I'll trim 1 off. Then I'll add 1 back in, or I'll add 2 in. It just depends on the movement of the trade and my conviction on the trade. But yeah, I think the key for me, especially in the last several months, is identifying these areas before the market gets to them, and knowing where I want to enter and how big I want my stop to be, and just immediately executing when that happens. And then it creates a peace. Like, I'm at peace. I'm not anxious. I'm not nervous. My heart's not racing. I'm at peace with whatever happens because I know that I plan this out sometimes for days in advance, and I'm not nervous about it because I know that the numbers are in my favor, that I'm probably going to make money. And if I don't, the next one, the numbers are in my favor again. You know what I mean? So that's been the key for me, is not taking too many trades. I mean, there's days I've taken 4, but that's a lot. That's a lot for me. Like last week, I think total I had 9 trades. My biggest week ever was like 3 weeks ago, and I think I only had 4 trades that week. And it was just one of those weeks where, 300-point move, 150-point move, 200-point move. They were just, the market was really moving. And I only took 4 trades that week. And it was my biggest week ever. So you don't need to take a lot of trades. You just need to take the right ones. Obviously, when you're passing evals and trying to stack evals, I get it. I did the same thing. I'm just taking tons of trades. That's different. But I'm talking about strategy type trades. I think Alex is doing this where he's like, he's not pressed. If he sees a good setup, he's taking it. If not, he's just not trading that day, or he's busy and he's not trading that day anyway. And he's making consistent money, and he's trading less. And I think that's really smart. And the best traders, like Umar, he's happy to like take 1 or 2 a week, because he's got conviction on the trade, and he'll size up on that trade because he believes it's going to be a big one. So that's kind of my mentality when it comes to like how many to take. I know that we're in tweener zone right now for me, and I'm not interested because we're in the middle of my range. So I either want to take a short up near the top of the range, or a long down near the bottom. And if it breaks the range, then I'm looking for another setup, or I'm coming back the next day. That's all. And everybody can make money doing this, but I also don't take longs when let's say we're pumping all day long, and we're near the end of the day. I'm not going to take a long, just because I'm looking for this 60, 80, 100+ point moves, and statistically, I'm not going to buy up where I should be shorting or sell where I should be longing. So that's kind of my mentality. Sometimes they rocket it 100 points at the end of the day, or dump it 100 points, but statistically speaking, I don't like those trades, so I don't take those. Oh, let me show you guys yesterday's trade. So I was bearish yesterday, and Gundo knows this because we were talking. I was bearish on the day. I thought we would dump yesterday because we were above opening print, and I thought they were taking liquidity and they were going to dump it, and I was wrong, but it's cool. So, all right, so here's open, right? So I was interested in this area for shorts, and I shorted off this wick right here. Okay.
What time is it? 10:30ish?
Yeah, I didn't get the setup until around then. You can't see it now, but there were gaps here and other confluences telling me to go short. So I shorted here almost to the top of that wick, 19,900-ish. And it went off pretty quick. I trimmed pretty quickly because I wasn't sure, and this bullish gap was here, and I didn't like that. So I trimmed as soon as we hit that gap. Move my stop to break even because, again, this gap's pretty big. And it went against me, hit my stop. No big deal. I was in profit, so no biggie, right? So then I got off at like 11. And then they broke out. I was like, oh, okay, cool. Maybe they're going to hit my next zone. My next zone was 950. Was 19,950 right here. This is my next area of interest, right? Same thing. I had some fair value gaps, some order blocks, and other things telling me that this could be a good short spot. But if you look at the time, it's noon. I don't trade at noon. I was doing other stuff at the gym. My alarms went off. I looked at the phone. I was like, oh, cool, whatever. I like seeing plays play out that I planned that I don't catch. It doesn't bother me because it just tells me that I'm analyzing correctly, you know? So
Mm-hmm.
then that thing melted pretty good. I think Gundo, you took this one, didn't you? I think this one melted pretty good. I mean, it went 100 points, right? Well,
Yeah,
yeah.
I caught
You caught a good
half
chunk of
of
it.
it.
Yeah, you caught a good chunk of it.
Yeah.
So I got home at like 12:50 or 1, and I'm like, you know what? That's a good short, but I think I'm wrong on the direction for the day. So then I look over and I'm like, this purple line is overnight high, okay? So they blew out of there earlier. They never retested overnight high. And I'm like, if they retest overnight high and dig down, I'm going to go long because I think they're going to retest this high, okay? So right here, when they crushed past overnight and hit the bottom of this gap, I went long at 45. So my entry was in this red candle.
You went long on the red candle.
Yeah, and I have a thing where Dr. David Paul, you guys have, I share his stuff, where he always said, you know, you need to have the testicular fortitude to put your entries where everybody else has their stops, right? So I enter where people are getting stopped out because that liquidity opens up and then it just goes, right? So I entered right here. I I could bank on there being stops in this area because you see this resistance or the support right here, you know? And then you see this little gap fill, and they had not tested the overnight. So I was like, they're going to test overnight. There are definitely stops here. They tested it. I got in at 45, which was a real good entry. I had a 20-point stop in case they took this wick down here. I had a 20-point stop. And then I didn't need it because they only dipped like 5 more points and then they rocketed. I trimmed right here. You see this order block in the 5-minute? You see this green candle between the red candles? That's a 5-minute, potentially a 5-minute bearish order block, but it was invalidated. So, but I trimmed there just in case. Okay. And then when they blew up here, and then they came back down, they created a 1-minute gap that I added at right there. And then I trimmed another one up here, and then I carried 2 runners to take this high. I thought they were going to go all the way up to my next zone, which is up at above 20,000, but they didn't. So I was happy to take that. That was 110 points, right? So they took these highs right here, and then they rejected pretty good. I closed right at this 950 area right here. But the reason I took the long is I saw this area right here, these equal lows in this gap and the overnight high as a strong draw on liquidity, and that to go higher they needed to grab that, and then that's what they did, you know. So it could have, like, there was no entries here on the 5-minute. If you look at it, there's no clean entries. Like, they didn't retest this gap. This is a breakaway gap, so they didn't retest that one either. So there's no clean entries on the 5-minute. So that was the right entry for me. And then I added off of the 1-minute. So you could enter it off the 1-minute, but if you're just looking at the 5-minute chart, you're like, crap, man, I would have missed that trade. There's no entries, you know, because they created this gap, but they never tested it. You know, this gap is a breakaway gap. They generally don't test those if it's trending. So, you know, that's why I took the trade. The liquidity I knew was there, and I suspected they would at least take these highs. I thought they're going to go higher. I was wrong. No big deal. I had my stop tight for that reason. And then I netted 110 points off of that one. Let's see. What's price doing right now, by the way? Nothing.
Sideways.
Yeah. So, anyways, that's my game in a nutshell. But I don't. The only levels I mark anymore are opening print, overnight high and low, daily high and low on the most recent days. Because otherwise, the imbalances show me where price will balance, and the wicks show me where liquidity is at. So I don't really need the levels like I used to, because I've transitioned to just using imbalances and liquidity.
Mhm.
Which means not taking anything in between.
Yeah, like for example, let's say I determine where a range is at that I like, right? Um, so let me take my fib tool.
Hey, Steve, I got to drop out, man. I got to go to bed. Good
All right,
talking
bro.
with everybody.
Yeah, no problem.
Here.
Great. Miss you, Al.
Yeah, I'll get on the live one day and demonstrate this for all you guys if you want. Not as detailed as Steve's doing right now, but I draw the little square boxes and I look for entries and exits that way, and maybe somebody will get something out of it.
Cool, bro.
All right. Guys later. Thank you, Steve.
See you, man.
All right.
So let's say I pick a range. You could pick the overnight range, which is a good thing to do. You could pick a 4-hour range. Whatever range you're focusing on or you think they're in, right? So, for example, let's just take today's range so far, right? So that's today's range, okay? Roughly. I'm not going to get the
Yeah.
coordinates exact, but so when I look at that, we're in the middle, right? I did like this 4-hour order block, and they really rejected it hard there, but we're in the middle. So I'm not really interested unless we get down here for longs or up here for shorts.
This looks like
Because,
a short to me right now, though. It's
yeah, I
kind of
mean,
looking like
it might be, right? But I personally am not interested unless we get to the bottom 3/4 of the range or the top 3/4 of the range. Or excuse me, the bottom quarter or the top quarter. Because those are the bigger risk reward. Because right now we have, what do we have on the daily range? 170 point range, right? I'm looking for bigger plays. So if it's a 50 point range, I'm not even interested at all, right? I won't even look at it. If we're just chopping in a little 50 point range, I'm not even interested in it until we break out of that range, and then I'd start to look at the next range. Okay, but the 160 point range is a pretty good range, so it's definitely worth looking at. So I'm looking at the bottom of the range or the top of the range for a play. At the bottom of the range, you can see that there's this 4-hour bullish imbalance. At the top of the range, you have this previous high and this big bearish imbalance that they haven't even really touched yet. So I'm way more interested in up in this area or higher, or down in this area or lower. I'm not interested where we're at, because let's say I caught the whole short from, let's say, Adam, it's short, right? And I catch the whole thing down to the bottom of the range, but it only goes to the bottom of the range. Well, it's only 50 points. Don't get me wrong, 50 points is a nice move, right? But based on
Yeah.
my criteria, I'm looking for 3, 4, 5, 6, 10 R, So if I'm willing to risk, let's say I put 2 minis on that and my stop's a 20-point stop, that's $800 times 20 accounts of 16 grand, right? For 16K, I want to make bare minimum 32, but really I'd rather make 48 plus. You follow me? And that's all relative. Like, let's say you're using 2 micros and you're using $80 for your stop. You want to make at least $160. That way you don't have to win that much to make money. So I do have a high win rate, but I don't have to based on my rules because I'm looking for 3+ R on a trade. And I know that where we're at right now, if I did catch a short, I can't get 3R out of it. So I don't even entertain it.
Yeah,
But
because it's chop zone. Yeah.
yeah. But if we get down low and it does go long, I could get it way more than 3R on that. Or if we get up high and it does go short, I could get way more than 3R. So that's kind of what that keeps me out of trouble. You know what I mean? Because as you guys know, like you could take 5 trades in this little area and just screw yourself, right?
Yeah.
And then when the big move comes, when it gets to your zone, you're like, damn it, I got nothing left in the bank. I got nothing left. I got no ammo left. You know?
Yeah.
Or you blew up and you're like screwed and you're like, oh my gosh, if I just waited for that play, it would have been a banger. You know what I mean? So I've done that. Trust me, I've done that. I mean, at the beginning, I blew hundreds of accounts, hundreds. And trust me, like in the middle there, it's a no-go zone for me. And the reason is I've screwed up very badly in those areas because you'll get down by 2 and you're like, oh, I just need 1 to get back. And then you get down by another one, oh, just 1 more. And then all of a sudden your account's gone, you know? So that keeps me out of trouble and keeps me only hunting the best stuff. And then when I lose on the best stuff, I'm totally fine with it because I know that I waited. I waited for the right move. I didn't take something hasty. It was pre-planned. And then it makes losing way more palatable when you're waiting for the proper setup, if that makes sense. 'Cause trust me, I'm super competitive. I hate losing, which is not a good mindset for trading. So you have to train yourself to be okay with losing. But for me, the best way to lose is to take a good setup and lose.
Yeah. So I kind of do the same thing. I do what you do in my own way. So what I do is I zoom way out. Like I look at all the time frames at once on all my screens, and I zoom way out, and I can see the pre-market areas, and I can see like the highs and lows, like what you do. I don't mark them. I just visually see them by zooming out, and I zoom out really, and then I just play. I play like the 9, the 20. I play the EMA and the SMAs, and that's the levels I play, which is very similar to your fair value gaps because they line up. So there's so many different indicators actually line up similarly to what you're playing. You're just playing like imbalances, but these averages are they line up. It's the same type of game.
Yeah, there's a guy in that group that M is following that he's a 7-fig guy also, and his strategy sucks. Like it sucks, but he makes like 7 figures, dude. Like it's like he has like he defines a range and then he has a couple EMAs and if they break it, he goes in. If they don't, he doesn't. That's it. Right? It's like so basic and dude makes, 7 figs, you know? So yeah, you don't need much. You just need to create your own rules and stick to them, and that's it. Like I like the imbalances and the liquidity just because that's what makes the market tick. Um, there's an algorithm, and the algorithm seeks those two things, and it's a balance price and take liquidity. And so I like that, but yeah, if you like indicators that kind of tell you the same thing, it's cool. Whatever works. So it's interesting because and there's guys in M's group that are just freaking insane technical, like doing all this study. Not when I say study, I'm not talking about back testing. I'm talking about like mean reversion, standard
The bubble.
deviation, all this stuff, and I'm like, my brain's hurting thinking about that. I just focus on this, and I do well, and that's all I need. So everybody's got something different as far as that goes, but the bottom line is, I would have a very simple finite set of rules that either makes you enter the market or does not. You know,
Yeah.
I think that's the smartest and the biggest key is not just willy-nilly entering the market because we want to be in a trade. That's when we hurt ourselves. So
Yeah, I got to work out just taking a loss and then knowing that the next trade that I take is still going to be a good trade instead of because I mean, like you were saying earlier, like dude, I was in on that 917. You guys are
long.
mowing the grass over here. Sorry, it's super loud. Give me one.
Yeah, sure.
But yeah,
Ooh, that was
it's like,
that
and
was a
then
good
dude, I
entry,
only
dude.
held for like literally 2 minutes. It's like, what the hell was that? And then it ripped. And then right where you were like, oh, that's
Killer
where you
entry.
get in.
Yeah.
Huh?
That was a killer entry too, dude.
Yeah. I was like, okay, because that was also the bottom of this. If you look further back
It
too,
was
that
gonna
was a
go up.
1 minute bearish gap.
Yeah.
So it touched the bottom but never closed below it. And actually, that's kind of like where I like to see it too. You know, it's testing it. Like,
Yeah.
looks like it's going to close, but
Mm-hmm.
and like you said, you know, that's already a level 2 on the hourly. So
Right.
I mean, that was that 4 hour. That was the bottom of that 4 hour, or I should say, the top of that 4 hour bullish gap too. I mean, yeah, sure, it went like a couple points below,
But not much.
but yeah,
It basically
yeah,
tapped
should
it.
have held that.
It basically tapped it and hit hit a previous low from a previous daily low from last Monday.
Yeah, I got that drawn in too. I had that, but I got in first thinking it was going to bounce that bearish or that bullish gap, and then that's what effed me. And I was even saying that prior like pre-market. I'm like, oh, okay, well, what's the spread on that?
Right.
Because sometimes, especially on a bigger time frame, I guess another thing I look for is like, okay, I imagine if it is pushing, 20 points is kind of like your give or take for a next level of it reaching. But if it's further than 20, then it's like too much of a stretch for it to try to take that.
Right.
If
That
it's
thing
already
ripped.
reaching. Yeah, I
It
know.
ripped
Damn.
like 100 some points, right? Yeah, and you know you could have trimmed and moved your stop to your entry and just held
Yeah,
through
exactly.
those couple red candles and then it rocketed again. You know?
Yeah.
But yeah, I
Mhm.
mean, I would say if you have conviction on a move, especially if you pre-plan the move, it's worth holding on to. It's worth the risk, you know. And just
Yeah.
get your mind conditioned to that's what you do, and eventually you won't even think about it. You know, eventually you just enter, win or lose, whatever, manage the trade properly, and that's it.
Yeah. Okay.
Yeah.
Yeah, I guess I was going in a little. I might have went in a little heavy too. I think that's when like my nerves get to me, and I shouldn't even be doing that. I don't even have a freaking big enough account
If
yet.
you think
You
you were
know?
heavy, you were probably too heavy.
Yeah. Okay.
You know what I mean?
Yeah.
But there are times that I'm like I'm up or I'm down either way. Because when I'm
Mm,
down, I don't want to take a full size loss. When I'm up, I don't want to take a full size loss because I want to preserve. Then I'm like, this feels big. All right, I'll size down. You know what I mean? Like if
mhm.
that or I don't take the trade, one or the other. But if it's a valid trade, I'm more than likely will size down and take it. You know,
Yeah, that makes.
that way, if I take the loss, it's like, that's the cost of doing business, not a big deal. But if I take a full size one and I wasn't feeling it, I'm gonna go back to myself, like, dumbass, you told yourself not to take a full size trade. You know what I mean? So
Mhm.
I generally talk myself out of it and just take, a half size or whatever.
Yeah.
So yeah.
Okay.
But I got to bounce, fellas.
Appreciate
Man,
the time.
I just came back, Steven. I'm
I
ready.
got about two.
Well, I'll post this later in one of the channels. I'll probably put it in where should I put it? I'll figure it out. Probably videos, recap, education, something like that.
Well, have a
So
blessed day, guys.
you mostly trade 50K accounts?
Yeah, I have 20 50Ks that I copy. and then I have a bunch of Juno, be quiet. I have a bunch of backups, but I have some 250s that are passed, but they're not live.
God, man,
But
I can't put the 50K account to save my life. Keep
you can't
blowing
what?
them. I can't pass a 50K account to save my life. I keep blowing them. I think I'm too impatient with them.
I would encourage you to review the part that we were talking about on those 1 minute fair value gap inversions, because I think you'll find that you could pass some really quick. And if you
Okay.
guys want, one day I can do a live where we're just doing that while the market's going. We're just looking for those.
Yeah, that'd be great.
Yeah, because I think once you
Sooner
see
than
it,
later would be appreciated.
yeah, once you see it and once you get one, you're gonna be like, oh man, this is not difficult, you know.
Mhm.
Once you get it, it'll click. You just gotta accept that you're
Yeah,
gonna
I
blow
was.
some of them, you know.
Yeah, I was following along at the beginning before I had to leave the meet. We'll leave to
It's okay.
the meeting, but it looks like I need a. I mean, I don't understand it completely conceptually yet,
Yeah.
so I need to take more time to look at the video.
Yeah, just review it and then shoot me questions and stuff too if you have any.
Oh, Steve, I have a question. The guy you're talking about on Instagram, can you post his link?
Yeah, sure. Yeah, he's really good. He's a British dude. Just very
Love it.
simple and concise, like really good. That's honestly just watching his videos is where I got. Alex had told me about, imbalances and stuff like that way back. And then that sparked my interest, and then just watching his videos is how I started digging into it.
Yeah.
So he's really good. So yeah, I'll put it in there.
In there.
Steve,
All right, cool.
do you watch price action? Like you just watch how the candle moves? Do you trade off of that?
I mean, to answer your question, like I don't trade off of it, but I look for certain behavior and conviction. Like let's say that I want them to grab an hourly liquidity or something to the bullish side for me to go short. If they take it if they're sissies about taking it, I may wait. But if they take it like they drive it and they take it, I might use that as a signal that it's a liquidity grab and then I'm going to go short off of it. You follow me?
Uh-huh.
So I do look at the candle behavior and how they're acting at the time, to determine like, do I enter now or do I wait for more evidence? I like those strong liquidity grab moves to go in the opposite direction off of. If they're pumping really hard up into an area of interest for me for shorts and they're just like blasting it and they hit my area really hard and fast, I'll normally go short without hesitation. But if they're grinding up to it, I'm thinking, shoot, they might be going higher, so let me wait and see what happens. You know what I mean?
Mm-hmm.
So I do watch the candle behavior, but for me, the time is very important. Like I'm from open to like 11:30 at max, or 1:32 to 3:30. A lot of times I'm done in the morning. I don't even come back, unless we're near a really strong point of interest that I'm really interested in. So today, for example, when we get off here, I'm gonna set some alarms. If they get to my areas by 2:30 or 3 o'clock, I might look at it. Otherwise, just wait for tomorrow.
Mm-hmm.
I'm not expecting a lot today, so whatever. Okay, I got to bounce, fellas.
Thank you. Appreciate your time.
No problem. I'll catch you guys later. I'll post this later too. See ya.
All right, Steve. See you,
Later.
Steve.